Welcome to the Elysium Wealth Advisors video titled Why Double Taxation Agreements Are Important. Hi, welcome to Elysium Wealth Advisors. If you're an expatriate living in Europe or another country in the world, you've probably realized that managing your money across borders is far more complex than it should be. Today, I want to explain why specialist financial planning for expatriates isn't a luxury. It's essential. Most of our clients come to us with the same concerns. Am I being taxed twice on the same income? Where am I actually domiciled for tax and inheritance purposes? Are my investments structured correctly now that I've moved country? Living in Spain, Portugal, France, or any other country with assets and families spread across different jurisdictions creates a web of rules that don't always work in your favor. Without proper planning, you risk unnecessary double taxation, inheritance disputes across borders, investments that are simply not tax efficient for your new country of residence. At Elysium Wealth Advisors, this is exactly what we specialize in. We have over 28 years' experience, and our team combines wealth management expertise with cross-border legal and estate planning knowledge. We work primarily with expatriates who are based in various countries around the world, such as Spain, Portugal, France, South America, etc., typically with portfolios starting from around EUR $20,000 and upwards. Our clients stay with us on average for 5 years or more, and our retention rate is over 95%. Why? Because once we've untangled their situation, they finally have clarity and confidence about their financial future. Knowing about double taxation agreements is important because they directly affect how much tax you actually pay. Without understanding the relevant DTA, you can pay tax twice on the same income, for example, in the country where you earn it and the country where you live, or miss out on legitimate tax reliefs and credits. DTA set out which country has the primary right to tax different types of income, salary, pensions, rental income, dividends, etc., and how the other country should treat that income, where you are treated as tax resident. Many expatriates could be considered resident in more than one country under local rules. DTAs contain tiebreaker rules that decide which country is your main tax residence for treaty purposes. This affects where you file returns, which country taxes your worldwide income, how your other country of connection should treat that income, how your investment income is taxed. Dividends, interest, and capital gains can be taxed very differently depending on your country of residence. The source country of the income. DTAs often reduce withholding tax on dividends and interest or clarify where gains are taxed. If you don't know the treaty position, you may overpay tax at source, fail to claim back tax you're entitled to, structure investments in a way that's inefficient for your situation. How pensions and cross-border retirement income are treated. For expatriates with UK pensions, crops, QNOP, and URFL other international arrangements, DTAs are crucial in determining where pension income is taxed, whether there is relief from double taxation. Understanding the treaty can mean the difference between a tax-efficient retirement income or unnecessary tax leakage every year, estate planning, and what happens on death. While many DTAs focus on income, some countries also have estate or inheritance tax treaties. These can influence which country taxes your estate, how foreign assets are treated, whether there is relief for tax paid in another jurisdiction. For internationally mobile families, this is critical to avoid double taxation on inheritances, complex disputes between tax authorities, avoiding costly mistakes and penalties. Ignoring DTAs doesn't mean they don't apply. It just means you're more likely to get it wrong. Common issues: declaring income in the wrong country, not claiming reliefs you're entitled to, triggering inquiries or penalties because your filings don't match treaty rules. A proper understanding of the DTA helps ensure your tax position is defensible, compliant, and efficient. Planning with confidence as an expatriate. DTAs are not just about this year's tax bill. They're about long-term planning, where to hold assets, where to retire, how to structure pensions and investments. When you know how the treaty works between, say, the UK and Spain or Portugal in your home country, you can make strategic decisions instead of reacting after the fact. We provide a comprehensive, joined-up approach to your finances as an expatriate, including investment strategies tailored to your residency and long-term goals, retirement planning that considers where you live now and where you may retire, estate planning and domicile advice so your assets pass efficiently and according to your wishes, tax-efficient structures for cross-border wealth, guidance on crops, QNOPs, and SIPs for those with UK pensions, and insurance solutions such as whole-of-life and medical cover that work for internationally mobile families. The outcome for you is simple: a clear understanding of your tax and domicile position, a properly structured investment portfolio that matches your residency, peace of mind that your family and estate are protected across borders, and one point of contact who understands the full picture. not just a single product or country. If you're an expatriate and you'd like to bring order to your financial life, we'd be happy to help. Visit our website at elysiumwealthadvisors.com and request an initial conversation, or contact us directly to arrange an online or in-person meeting. Let's make sure your wealth is working as hard and as internationally as you do. Goodbye.